Picture the ad. A guy in sunglasses hands over a set of keys, steps back, and watches a stranger drive off in a boat he owns. He doesn't go with them. He just collects the money. That's the pitch behind every boat rental business you've ever seen advertised online. Buy an asset. List it. Get paid to let strangers use your toy. Here's the actual Tuesday. It's 6:10 in the morning. The owner is backing a trailer down a boat ramp in the dark because the rental starts at 8 and the boat needs to be fueled, inspected, and floated before the customer shows up. There's a scuff on the hull from last weekend that needs a phone call to a fiberglass guy. The bilge pump is making a noise. It wasn't making Friday. And the passive part of passive income is currently kneeling in 2 inches of lake water with a flashlight in its mouth. The boat rental business is real, and for the right person it's genuinely good money. But it is not a vending machine that happens to float. It's a fleet management business with a customer base that has never operated heavy machinery, sitting on an asset that actively wants to sink. The appeal is straightforward. A boat costs tens of thousands of dollars, needs somewhere to live, and gets used maybe 15 days a year by its owner. Renting solves an obvious mismatch between the cost of access and the cost of ownership, which is exactly why peer-to-peer boat rental marketplaces have grown fast over the last decade. They let anyone list a boat the way anyone can list a spare room. Demand comes from people chasing an experience, not an asset, a bachelorette party, a lake day, a fishing trip. That's a large and recurring customer base. The catch is that it's also a deeply seasonal and weather-dependent one, which becomes the central tension of this entire business. Before a single rental happens, money leaves. A usable pontoon or deck boat runs $20,000 to $40,000 used. More if it's new or a wake boat aimed at a higher-paying crowd. Then there's the slip. Marina dockage isn't optional. A boat sitting on a trailer in a driveway doesn't generate walk-up rentals, and most cities restrict where you can launch commercially anyway. Slip leases run anywhere from $2,000 to $8,000 a season depending on the market, and wait lists at good marinas can run years. Add business licensing, a commercial use permit if the marina or state requires one, a charter or livery license in some jurisdictions. A single boat operation is realistically $35,000 to $60,000 before the first booking confirms. This is the phase where the spreadsheet is all outflow and the business doesn't feel real yet. The boat itself is the headline cost, but it's not the whole fleet. Every boat needs a matched trailer if it's not staying in a wet slip year. Round a set of Coast Guard-compliant life jackets sized for adults and kids, fire extinguishers, navigation lights, and a marine radio or at minimum a charged phone in a waterproof case. Since cell coverage on open water is unreliable, multi-boat operators add a small maintenance shop, an outboard motor hoist, basic tools, spare props, because a bent propeller from hitting a sandbar is the single most common repair, and it takes the boat out of the rental pool until it's fixed. Serious operators install GPS trackers on every boat, partly for recovery, partly because renters occasionally take a boat further than the rental agreement allows, and partly for insurance documentation if something goes wrong on the water. This is where the business quietly stops looking like the ad. Marine insurance is the biggest line item most. First-time owners underestimate liability coverage for a boat, operated by an untrained renter costs meaningfully more than coverage for an owner. Operated boat because insurers price in exactly the risk you'd expect: strangers, alcohol, open water, and zero boating experience. Then there's fuel, which the renter often doesn't fully cover, even with a surcharge built in. There's cleaning and detailing between every single rental, because a boat that smells like the last group's cooler doesn't rebook. There's routine outboard servicing on a schedule measured in engine hours, not months, and rental use racks up hours fast. There's dock and lift maintenance, bottom paint to prevent hull fouling and winterization, pulling the engine, draining the systems, and paying for covered storage for 4 to 6 months a year when the boat earns nothing at all. And there's damage. Not catastrophic damage, normal damage. A cracked rod holder, a torn bimini top, a scratched gel coat. Security deposits absorb some of it. They rarely absorb all of it, and disputing a damage claim with a renter is its own unpaid part. Pricing isn't just an hourly rate. Most operators structure it in tiers: a half-day rate, a full-day rate at a modest discount per hour, and a premium weekend rate that captures the customers who book Friday for Saturday and won't shop around. On top of the base rate sits the real margin driver: the damage waiver, sold the same way a rental car company sells insurance at the counter, plus a fuel package, plus for boats, over a certain size, a mandatory captain ad. The base rental barely covers the boat's fixed costs. The upsells are where the actual profit lives, which is exactly why every operator pushes them hard at checkout. Here's the structural insight that decides whether this business scales or stays a side hustle. A self-service rental, where the renter drives the boat themselves, has almost no labor cost beyond the person handling check-in and cleaning. A captain rental, where a licensed operator drives, is safer and rents at a premium. But that captain's day rate can eat 30 to 40% of what the trip brings in. Owners who stay small and self-service keep more of each dollar but cap their revenue at what a solo boat can produce. Owners who add captains and expand the fleet unlock real scale. But they've essentially built a small charter, boat staffing company. And staffing is where most service businesses' margins go to die. Most operators finance the boats themselves, with marine loans typically running 7 to 15 years, longer terms than a car loan, because boats are treated more like recreational real estate than vehicles. Monthly payments on a $35,000 boat land, somewhere around $400 to $600 depending on rate and term, due every single month, including the winter months, when the boat is shrink, wrapped in storage, and earning nothing. Slip lease rates tend to climb a few percent a year at popular marinas. Realistic break. Even on a single boat, after financing, insurance, and maintenance, typically lands somewhere in the second or third full season, assuming no major mechanical failure and no season loss to bad weather. The single biggest risk in this business isn't the renters, it's the calendar. In most markets, 70 to 80% of annual revenue happens in a 4 to 5 month window between late spring and early fall. And within that window, weekends carry a disproportionate share of the bookings. A rainy Saturday isn't a bad day. It's a day with zero revenue and full fixed costs. Add algae blooms, low water levels, red tide advisories, or a storm that damages the dock, and an operator can lose a meaningful slice of their entire earning season to something with no fix. There is no make it up next week in a business where the calendar itself has an expiration date. The excellent outcome looks like this: 3 to 5 boats, a marina slip in a high-traffic tourist market, low damage rates because the renter screening is tight, and a mix of self-service and captain trips. That operation can net an owner somewhere in the range of $60,000 to $90,000 a year after every cost, because the fixed costs of running a fleet, the shop, the insurance relationship, the booking system, spread across more boats instead of just one. The acceptable outcome is a single boat, run mostly by the owner on weekends, treated as a side income alongside a regular job. After the loan payment, insurance, winterization, and maintenance, that owner is realistically clearing $10,000 to $20,000 a year. Meaningful money, but closer to a well-run hobby than a business that replaces a salary. The failure case is a single boat bought with a loan the owner stretched to afford, a mediocre slip location with light foot traffic, 1 or 2 expensive damage claims that spike the insurance renewal, and a rainy summer. That owner can end the season having paid to own a boat that strangers used, netting less than zero once the loan and insurance are counted. The exact opposite of the AD. The boat rental business works, but it works for a specific kind of owner. Someone who already has marina access, genuinely enjoys boats enough to tolerate the maintenance, and treats the first boat or two as a lifestyle business, rather than a passive investment. It does not work as a hands-off way to make an asset pay for itself while you do something else with your time. The real money in this industry isn't in owning one boat and renting it out. It's in owning the marina slip, the fleet, and the booking relationship at scale. Because at that point, you've stopped renting a boat and started running a small hospitality company that happens to float.